Hello traders, Cousin Vinny coming to you from theclosingprint.com on September 15th, 2019. In this edition of your weekend video newsletter, we'll discuss the indices, all of which moved higher, with IWM and small caps outperforming, cyclicals and value stocks pointing to potential rotation and a follow-through in the weeks to come into the seasonally strongest months of the year. The big cap tech names moved higher with the exception of Facebook, which was pretty much neutral for the week. Tesla and Intel had nice moves. We took some profits on Intel as the stock catapults above previous pivot level resistance. We see the bond stock ratio is bullish. HYG and junk are both above their 20 EMA on the weekly time frame, but they are currently neutral with a doji last week. The Dow Composite is at a double top. We need to see that break out, though it's probably going to see resistance there short term. And the S&P 1500 is on a buy signal, while NAMO and NIMO continue their bullish cycle for the third week straight. Breadth thrusts are above 30%. You know that means we could see a little bit of flagging action or a fade at current prices on the indices. NYHL is above zero, and that's bullish. And we had the New York Stock Exchange advance decline above the red zone for the second week straight. That is bullish as well. US dollar is pulling back. It's sitting right above the 50-period moving average. And we had bonds with that parabolic high reversal last week that we've been looking for several weeks. Gold, we saw a lot of profit taking 2 weeks ago, extending into this last week. Copper is on a big bullish move as the copper shorts are squeezed. That's bullish for the economy. And we had West Texas crude for 17 weeks just below its 20-period moving average. Though we do expect crude to start moving higher this week, affecting U.S. small cap stocks, since the IWM is populated by a lot of small cap oil and gas and energy names as a whole. The heat maps are more green this week with the XLY-XLP ratio, as we pointed out over the last couple of weeks, turning back to the upside. That's bullish for equities. We had the industrial sector leading again, breaking out, and small caps continue to show favor. So look for IWM to continue higher, along with transports and the S&P 500. International markets are improving despite what CNBC and financial media are telling you. And we had Bukowski with 4 or 5 red, with his CPI signal green since September the 13th, moving from 77.8% the previous week to 83.3% this week, which is bullish, with 2 bearish patterns, 10 bullish patterns, and 173 patterns waiting for breakout. The parentheses just note last week's signals. Bottom line, the markets are in an area where we could see a little bit of a fade or a pullback, though we are watching for value, small caps, oil and gas names, and energy to outperform, along with value stocks this week, as most of our signals are bullish to slightly neutral. We have SPY weekly moving higher, closing near the all-time highs. Price action is above this support zone, right around 295 where it broke out last week. And we have RSI above 50 and rising, with MACD just about to cross over through its signal line, which is telling you the bulls are wresting control from the bears, despite what CNBC and financial media might be telling you. In addition, Rinko, which removes noise, had continued to build white bricks. That's telling you to stay bullish. That said, being at all-time highs with RSI above 50 There's also the possibility this could fade a bit as we hit this double top. There's a lot of traders most likely looking to short the markets on Friday, so I wouldn't be surprised to see either scenario, a push higher or a fade or a flag at this point, build up some energy and then push higher. All depends on the news cycle to start the week. As the Iran drone strikes against the Saudi Arabian oil production facilities will most likely affect U.S. energy names this week, that could help propel the markets higher. So just be aware of it and wait for the opening range on Monday. The Nasdaq 100 is slightly below its all-time highs. Looking at volume by price, you can see quite a bit of buying up here and no red bar. So that's telling us to be open to the idea of a break higher, though many traders are concerned about growth stocks versus value. Suffice to say, RSI is above 50 and climbing. We'll respect the trend and this doji price action and wait for the opening range on Monday before making any decisions as MACD continues to drift a bit lower on above average volume last week. The clear winner, of course, last week was small caps IWM, closing higher 4.94% for the week, with RSI finally moving back above 50 and price action breaking this trend line that we've been watching for the last few months. We are above volume by prices, telling you that it's going to get a bit easier to push higher once we get above 160. We'll be looking for that this week, mostly because the Iran drone strike against Saudi Arabia's oil infrastructure will most likely affect the small caps that populate the Russell 2000. There's quite a few names that are from the energy, oil and gas group. So look for those small cap names to outperform again this week. We pointed that out last week and the week before as we started looking at a lot more stocks that are priced below $10 per share. You might have been asking yourself why I'd look at those kind of things. That's the reason, as small caps continue to outperform. They'll most likely continue this week given the news in the Middle East. In addition, if we pay attention to the S&P 500 on the weekly time frame, we can see these periods of consolidation in red shading back here in 2011 and 2012, again in 2015 into 2016, and presently, followed by breakouts between these vertical blue lines that once price action broke out of these patterns, what followed through. Some of the things that were consistent during that time period were transportation stocks, which broke out, followed through. So we'll be watching how transports perform this week. In addition to Russell 2000, same consolidation period led to a follow through and better things to come once we broke out of these consolidation patterns in the past, with the takeaway being small caps potential as we break above these trend lines on the weekly time frame. In addition, for the past 3 or 4 weeks, we've been talking about the change in direction of the cycle with respect to small caps and the Wilshire 5000, a broad measure of market participation and breadth that occurred back here in the middle of August. We pointed to increasing volume, suggesting between the two that price action would start to make a series of higher lows. We finally got that over the last 2 weeks, with RSI confirming what we're seeing as price action moves above previous pivots and RSI stays above 50. Look for that to continue in the short term as the preceding few days outweighed the volume we saw on Friday. Additional measures of breadth and price action, if you're still skeptical at this point, if you consult the new highs minus new lows percent, this is clearly on a buy signal and above its moving average. It turned green last week, and histogram high-low percent is confirming as price action nears all-time highs for this index of S&P 500, S&P mid-cap 400, and S&P 600 small caps. Gives you a pure view of breadth as more stocks are advancing or making new highs than are declining or making new lows. In addition, the New York Stock Exchange, all stocks that trade on the index continues to make new highs. That's telling you breadth is improving and more stocks are participating. Finally, if we consult the McClellan oscillators for the NASDAQ, NAMO, or the New York Stock Exchange, NYMO, we can clearly see the black line is in a bullish cycle, has yet to turn or flatten out, telling us to be open to the possibility price action could continue higher, while NYMO for the New York Stock Exchange clearly paints the same picture as the moving average continues higher. No change in direction yet. Looking for NYMO to hit the plus 60, plus 70 zone in the short term to be overextended. We hit minus 80 back on August 5th, and since have continued to perpetuate the statistic that tells you where price action over the next 30 days improved 78% of the time. And here is the S&P advanced decline volume line, cumulative advancing stocks versus declining just for good measure. You can see the momentum is clearly still bullish. The caveat is we don't want to be too bullish on Monday. We need to look at things that could prove our thesis wrong as well. That could be the Dow Composite, more than 60 stocks from the transports, industrials, and utility sector that are at a double top. So a breakout here would be confirming our bullish thesis where we could see a fade. That's highly probable as well, as the index would most likely be gathering some strength with major support down below and then a follow through at some point, as most of the sectors look very bullish, while the put call ratio continues to move higher from an extreme bullish zone back up into the neutral zone. If this does move a bit higher, that's telling you people are starting to take more puts on Monday and Tuesday, looking at those double tops and resistance levels overhead at all-time highs. That would actually be more bullish than if we start to see people taking a lot more calls. This would drop back down into the red zone, indicating that we need to be more cautious. A push higher would tell us they would be buying more puts and would actually be more bullish for us in the short term. VIX also confirming that fear has been dissipating over the last few weeks, putting in lower highs and now lower lows below the 50-period moving average, and has yet to get to the red zone where we would start to get a lot more cautious. This has potential to continue to move lower. In addition, the 60-minute time frame, VIX flipped to give us this signal is green, which is telling us to be favoring a bullish setup versus bearish when it's red. The 60-minute time frame telling us to start the week open to the idea that we could move higher. Starting off the week, the bond stock ratio is bullish as the 10-year Treasury yield, TNX, on the weekly time frame starts this cycle upward, as we've been pointing out over the last few weeks, that the previous times this 10-year turned on the weekly time frame back in 2012 and 2016, the S&P 500 rallied more than 60% in 2012 and more than 50% in 2016 into that 2018 period, where we saw the 10-year reverse to current levels. Bond traders that were short had to cover as the 10-year continues to ramp higher. We also saw HYG and junk, high yield corporate and junk bond yields moving higher, staying above their 20 period, They did not break down like they did back in 2018, giving us a clear signal to get out of the way before the markets dropped into the lows in December. We saw nothing like that this time around. Another reason to be bullish. And finally, we had TLT, AGG, IEF, all of the bond funds moving lower as bonds were starting to show signs of rebalancing. We got short TLT via the 142 puts. Those did very well over the last couple of weeks. And we see an oversold condition starting to set up. So there is a potential for TLT to come back to this level and bounce. You have volume by price support as well, as traders continue to shift from one side of the boat to the other, suggesting that now everyone is bearish and due for a bounce. We also saw currencies and the fear and safety trades starting to unwind as the US dollar moves off of these 3-year highs back to the 50-period moving average. That will affect commodities that are priced in US dollars. We also saw the British pound US dollar pair moving higher as shorts began to cover, and we see this reversal in the British pound and the euro playing out over the last couple of weeks. So far, this reversal in the British pound has yet to affect the FTSE or the London Stock Exchange. European stocks, many of them trading near highs, as this chart of global rates depicts, something that Dough Flippa, Pizza Maker, shared with us over the weekend. You can see global growth rates are a lot better than what CNBC would have you believe, while inflation rates in the right column give you an idea of what to expect in the short term, and the effect the US dollar fade has had on copper futures, with copper shorts at all-time highs, looking for this to reverse, as we saw last week with copper prices reversing, shorts covering. We broke out of this descending wedge, which is bullish for the economy. This is a leading indicator, and gold fades as fear and safety trades continue to unwind. We saw this starting to move lower, so those of you who were short or took profits into strength 2 weeks ago, you did well to be shy of gold in the short term. Looks like a little bear flag underneath the price action. Could drop back down into this Kirby and support back here in July and August price action. And then there's West Texas crude and Brent, which have been spending most of the past 17 weeks below the 20-period moving average, the center of the Bollinger Bands. Reluctant to get back above these pivot highs. That should occur this week as the Iran drone strikes against the Saudi oil infrastructure most likely will have an effect on U.S. small cap energy production, oil and gas names. So watch those going into this week. We should see crude break out of this series of higher lows now and produce a higher high on that news. In addition, we saw sectors improving over the last several weeks, with the sector heat map read from left to right along the top, with the most recent week readings giving us more chartreuse greens and fewer yellows and reds, while the international markets continue to improve as well, despite what CNBC is telling you on a daily basis. We also saw the consumer discretionary versus consumer staples ratio continue to turn back up last week. Back in September and October, before the Fed raised rates and got very hawkish, this started to trail off and start to accelerate to the downside in November and December. In January, you saw these spread open, flatten out again in May, June, and July. August turned down once again, so we had a signal to be more cautious, take profits into strength. Now we see price action starting to turn back up again as institutions are clearly beginning to pick up discretionary names that should perform in the current market cycle as cyclicals, value, and small cap stocks continue to be favored over growth in the short term. We also saw industrials breaking out on the weekly time frame, which is telling you the bears have got this all wrong. If price action continues to push higher, we have three white soldiers as price action moves above an area of no overhead supply. This could accelerate into the seasonally strongest months of the year. We also saw financials performing well. We're at resistance area that should see a follow-through if banks continue to perform along with financials this week. Materials, along with copper, continue to show a breakout condition setting up, volume increasing. The communications sector, along with Netflix, Disney, Fox, Comcast, etc., continues this bullish move. We're at resistance. And consumer discretionary continues to push higher. Look at the volume. MACD is about to cross. And price action suggests either a fade here or a breakout as Bollinger Bands continue to expand. That said, we did see some signs of selling over the last month and a half in technology, so keep an eye on this. We're just below the highs. We did have an above average week of selling volume, so that's important to note. As that group of technology names, growth names, continues to deteriorate, we see value outperforming as this line drops. Clearly you can see growth stocks, technology predominantly, flat to sideways, whereas value stocks, those paying dividends, continue to be favored along with small caps and cyclicals. These rose very quickly last week, outperforming in a big way. Here is the IBD 50 for the week. Many of these stocks could be considered growth names, so be aware of it. Stocks that you're trading, you want to make sure that, number one, price action is above the 20 and 50-day moving averages. Maybe testing the 20 period like we see with Arch Capital. RSI is above 50. That's telling you to respect the trend, which is very clear and bullish. A safe entry on Monday would be a bullish day that follows through, takes out this pivot high right here, and RSI continues turning higher as a function of price. We're looking for increasing volume in the short term. We like Boot Barn for the same reasons. There is a potential that this continues to ramp higher as RSI climbs. We also could potentially pull back and then follow through as long as RSI stays above 50. Looking good for this retail related name, which outperformed last week as retail sales numbers came in better than anticipated, as many of the big retail names like Costco, Target, Walmart all looked very strong. Dollar Tree, Dollar General also looked good. Look for a bullish follow-through day on Monday with Costco as it holds the 20-period moving average. Look for RSI to continue higher and for volume to increase in the short term. Baozun and many of the Chinese stocks look very strong over the last several weeks, holding above the 20-period moving average. Draw a trend line through here. If this breaks out above 48, RSI will stay above 50 at that point as a function of price. We'd like to see higher volume on many of these. JD.com's another one. Looking for a follow-through. Not looking as strong. We're looking for Momo to continue higher off of this retest of the 20-period moving average. Nice pullback. So if you do buy at the 20-period, you're not stuck in this waiting for it to pull back. RSI is still above 50, confirming that this should continue higher. If it does, look for higher volume and for Momo prices to move higher. Copart, this company salvages and resells flooded vehicles and autos after restoring for insurance companies. Stocks in this group continue to outperform. Looking for a follow-through on relative strength, RSI above 50. Volume clearly telling you that institutions are picking up shares. They are interested. With competitors noted in the bottom left-hand corner of your MarketSmith charts. If you are a subscriber, look for these stocks to move higher as well. I like the higher rating EPS numbers for potential trades. Chinese stocks in the education and tutoring industry group also pushed higher last week. RSI is above 50, price action above the 20 and the 9 EMA. Look for other names like TAL and competitors in this group, as you can see here, as potential trades as well. Look for them all to move together. Fleet Core Technologies at the 20 period moving average, stocks on the opening monologue with the asterisk next to them in the IBD 50 column are just telling you these are mean reversion trades. Look for a follow through for confirmation. RSI needs to get back above 50. If we start to see volume increasing again like we saw on Thursday and Friday, this could lead to a follow through breakout in FLT. Funco, this continues to push higher. The gap and go on volume tells you institutions were picking up shares. They like what they heard. As the company raised their guidance, they beat by 317% when they posted earnings back in August. This flat base breakout, if you use IBD methodology, the breakout 20% is where most IBD subscribers will start taking profits into strength. That would be $5 off of this level, so 30 and change in the short term. In mode INMD, this is one we've traded over the last couple of weeks, continues to follow through. This is an Israeli-based company that focuses on medical technology, following through on the daily time frame, looking strong into last week. We were talking about this one as it continues to surge higher. On the 60-minute time frame, same idea. RSI is above 50, price action above the 20 period, and volume confirming what we're seeing. Looking for a follow through. Wouldn't chase it now. Look for a little pullback or flag on Monday or Tuesday as this stock moves higher. Innovative Industrial Properties, the company buys warehousing space and converts it for use with the production of cannabis. With cannabis appearing to change trend in the short term, look for this stock on this mean reversion to follow through. It's got to get above the 20 period moving average. It's a little early right now, so it's something we're just watching at the present time. Volume is starting to pick up. If price action gets above the 20 period moving average and we see RSI above 50, in the weeks to come, this might be a new trade. We traded it over here, and we sold it as we started to move below the 20 period moving average, and RSI dropped below 50. J2 Global Communications, JCOM, following through, looking like it's going to continue higher. The company provides internet-based fax, voicemail, email, and call handling services worldwide. You can see this major cup and elongated sideways price action with a smaller cup here. Looking for a little handle under this 92 breakout zone, and then into the blue area, the buy zone on this MarketSmith chart as a follow through and a trigger on increasing volume, as we can see, and a most recent beat back in August. Maztec was a recent trade out of this flat base, cup, small handle, and a breakout back in August. Look for a follow through as price action holds the 9 EMA and RSI remains above 50. We'd like to see more volume in the short term for a new entry. Some of the payment processors last week were looking pretty good. Looking for a follow through in PayPal. This is a mean reversion trade. It needs to get above the 20-day, so it's still building. We're paying attention to the volume last week as we saw that elevated on Thursday. RSI needs to get above 50, price above the 20-day, and better things to come on PayPal if this continues. Rexford Industrial Realty, REXR, looking for that to follow through as well. Not my favorite setup, but volume has started to increase and prices above the 9 and the 20 with RSI above 50. Restoration Hardware breaking out of this massive cup and handle pattern, a continuation pattern with RSI a bit overbought at this point, volume increasing. That's telling you this is institutional buying. They usually fall all over themselves. It takes them days and weeks to fill positions. Not saying this is going to go straight up. A little pullback to the 90 MA would be an excellent entry with confirmation that institutions have been buying shares just north of 150, supportive of a continuation into the seasonally strongest months of the year. SolarEdge saw some significant selling and rebalancing in this name over the last couple of weeks. We're watching how price action in this mean reversion completes this week. Was in a nice bullish trend from April into the August top. We traded some of these on this gap and go. Institutions were heavy buyers here. We're watching what happens. First Solar, Sunrun, and a few others. Synchrony, financials, payment processors continue to look good along with MasterCard and others. Looking for these to follow through. What does Square look like? Square last week, big reversal candle. Need to see follow through. Most likely gets rejected overhead, so it's got a lot of work to do in the short term. And Atlassian, considered a growth name in the software space. Team following through, could get rejected overhead, so just be aware of it. RSI is turning up. A lot of work to do to get back above the 20-day. Most likely building phase 4. If you've read my book, you know this is the markdown period and could extend for a while as this stock recuperates after a nice bullish run over the past year, with the company reporting in mid-October. A push down to the 200 period moving average seems likely, an area where we would expect to see institutions picking up shares as volume starts to increase. In addition, some of the names on the MarketSmith relative strength that showed up this week. CRH, big cup and handle, looks like a flat base right here, a breakout above 35, looks like it's going to continue on a big increase in earnings this year being reported as the company continues to beat and volume continues to increase. We'd like to see this one, an Irish manufacturer of cement, asphalt, and building products for commercial and residential markets, continues to improve. Notice this company is based in Ireland. I don't know if that's for tax reasons, but if they do have any products coming from Europe, that's one of the reasons why we're seeing the transport stocks outperforming, in particular the bulk shippers that have been improving over the last 8 months. CRH looking good. Rambus also pushing through the buy zone. Look for a little flag or a little pullback this week for an entry. Don't chase it. This company designs interfaces, memory, security, and display architectures for computing, games, and graphics. Above average volume is what got our attention. It does have earnings at the end of October. Look for annual sales and earnings to continue rising into 2020. TGI manufactures aircraft engine and structural, non-structural composite components and accessories and assemblies. This looks like it's going to break out of this big flat base. Relative strength line is climbing. Showed up on the blue dot scan, following through on above average volume. Look for this to push through this buy zone, the blue area on this MarketSmith chart, and for targets up here at 34, with the company reporting earnings again in the first week of November. Ultra Clean Holdings, this one also showing up on the blue dot scan, looking for a follow through. Look at this volume. That's telling you institutions have been picking up shares of this company that manufactures gas delivery, chemical, mechanical, planarization systems for the semiconductor and consumer industry groups. And VIAV. I believe this one was mentioned by the Nigerians last week. Looking for this to break out into the blue zone, the buy zone, if you will, with earnings at the end of October. We also look at some stocks showing up on the 100% above average volume. If you rank these by volume percent, that's the list in green on your opening monologue that are moving higher on above average volume. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com with your weekend video newsletter. A watch list will be sent out to your email later tonight, 11:30 on the East Coast, 8:30 on the West Coast. Get outside and enjoy the day. It's beautiful out here. Fall weather's starting to come to New Jersey. Enjoy your family. I'm going to get outside and do the same. I hope you have a great weekend. Take care, and we'll talk to you soon.